Ooh, here we go. This is it. This is it. The beautiful, the glorious NVIDIA tech-led melt-up right before the Fed meeting. Oh, this is going to be one of the most entertaining weeks, I think, we've seen in the stock market in a very long period of time. If you haven't yet heard, obviously, NVIDIA's got its 3-day event. I personally think, generally, as we see with these events, they're buy the rumor, sell the news. Except that potential sell the news timing, the end of the event Wednesday, comes unfortunately at the same time as the Fed meeting day. So we'll see what happens. Then, not only do you get Fed meeting day, but you have to start pricing in Q1 earnings. And things are about to get very interesting. Especially, I just saw this, which I thought was very interesting. There is, I'm going to pull this chart up here. It is a chart just out this morning. Net interest income of U.S. households as posted by the Federal Reserve. Basically, this is a way of saying, hey, how much, are households making in revenue less the interest they're paying. So net interest income, NII, is actually a phrase we generally use in banking. And take a look at this here. Let's see. I gotta push. I changed all these buttons around. There we go. All right. So this is the net interest income of households. And in the past, net interest income of households has generally gone up. However, in the recent one, it plunged. Why? Well, it's likely because of the increase of debt we're seeing. But let's try to understand some of these different areas here. So let's first grab some form of arrow. And let's go ahead and go with, I don't know. Let's get a different color here. Let's go with green. There we go. Okay, so we have a previous tightening cycle here where net interest income went up. Why would net interest income go up? Well, think money markets. So when you're thinking about these numbers, think money markets going up. Think about being able to earn more revenue from interest, hence net interest income. Okay, so this made sense. In the 70s, this figure went up. This figure went up in the early 80s. See, here's our 77 period. We've got early 80s over here. And what do we got? We've got dot-com bubble, which we didn't have a tightening cycle over here. If anything, we had a loosening cycle. Obviously, Great Recession, we had a loosening cycle. Now, let's see here. Looking at, really, they're really just comparing to the 70s. That's the only time we've really had a hiking cycle. I guess you could say over here. But I think this is very interesting. How in this hiking cycle, you could have interest rates skyrocket the way they did, but not actually see household net interest income go up because people are so indebted today. So that does make me nervous. I don't think the debt bubble is a near-term catalyst for the market collapsing or falling by any means, but it certainly is a catalyst. Let me see here. What are they yapping about? It seems like they're yapping about something. Hold on.
I think...
Oh, no, this is just talking about United. Okay, got it. All right. So I do think we have a small data release that comes out in about 40 seconds here. I don't remember exactly what it was. It was something, it was like New York something. Let me see here. New York Fed Services Business Activity. Business activity. Okay, prior read was negative 7.3 for New York Fed Services Business Activity. Boy, that is a mouthful. And that number is now at 0.6. But there wasn't even an estimate for it. That's weird. Anyway. All right. So, where are we? All right. Pre-market. Very green. A lot of enthusiasm going into NVIDIA week. This is almost like playbook. Almost textbook before a large tech event. And I want to start by talking about Apple. Tesla, by the way, is up 4%. Apple's up 1%. You've got Enphase up 139, which here shows you this is less of an interest rate sensitive move as it is a tech move. Look at this. NVIDIA up 2.7, 3 on SMCI, 4 on Google. Yeah, that doesn't surprise me at all that Google's pushing more than Apple is. So I actually think it's I'm going to be Well, let me intro what it is first. Apple is in talks with Google to use Gemini as Google's AI tool. Great. That's fantastic. Maybe Siri can finally be intelligent then. Why does this disappoint me? I think Google Gemini sucks. A. And B, you know what it says about Apple? It says Apple missed the boat. They got nothing. This is kind of embarrassing in my opinion for Apple. So it's not a surprise to me that Google's up 4.7 and Apple's up 1.1. I actually thought Apple would have been down on this news, which is crazy. Excuse me, I got a little bit of this cough. All right, let's listen into CNBC for a moment, and then I want to get back onto more Apple.
That's Gemini AI technology for future iPhones. Joining us right now to talk about what a deal like this could mean.
They're talking about it as well.
Is our CNBC technology correspondent, Steve Kovac. And Steve, this is pretty interesting. I was digging through the reporting on this, trying to get a sense of whether this is imminent, whether apparently they were also in talks with open source AI. So how do you come down?
It sounds imminent in the sense that this is likely going to be stuff we see in the iPhones that come out this fall and likely going to be announced in June during Apple's annual developers conference. This is huge because the assumption up until just wee hours of this morning when this report came out was Apple's going to build its own model. It's going to do everything in-house.
Exactly.
So many times it does everything it can do in-house, but this is just a testament of they don't have the goods yet,
and because they can't, because they're not doing it in-house because they can't.
And exactly. And this is super interesting because 5 or 6 years ago, Apple hired a Google employee named John Giannandrea to report to Tim Cook, the CEO, to run all the AI stuff. Here they are on the cusp of an AI announcement, which Tim Cook has said multiple times it's going to break new ground in AI. It's interesting that they have to go to Google, at least to help in part, for them to do whatever it is they think they're going to do. I would also note this Gemini stuff is also running on some Google and Android phones already. Right. Samsung earlier this year has some. But like, if you look at it, what can it do? It can erase some photos. It can do some live translation in different languages. Are those the whiz-bang features that are going to make people, say, oh, I have a year-old iPhone, but I want the AI iPhone? Maybe.
No. Well, if everybody else has it and you don't, you start to fall further and further behind. That's the issue with it.
Well, frankly, that should be a software update. The fact that, oh yeah, you need the AI iPhone, that sounds absolutely ludicrous to me. I mean, I guess I wouldn't put it past Apple to do that, but that sounds ludicrous.
$19 billion a year that Google is paying Apple to be the source of searches.
Right, and on top of that, there are two platforms, Apple and Google on mobile, that's it. And you have the two platforms tying up even closer together. We're expecting the Department of Justice to sue Apple for antitrust any day now, perhaps even this week, tomorrow, or the next day. You can hear them over at the DOJ, Jonathan Kanter's people, typing right now, trying to get this in there, because this is putting these two together on this fundamental new kind of technology. It's not just about app stores anymore. It's about the AI tie-up as well. So I can totally see them looking into that as well, just strengthening the duopoly they already have over the smartphone market. That's going to be a huge issue.
Apple shares up 1% this morning. Alphabet shares up by 5% this morning. Very interesting
stuff.
Shows
you which way you think the money's going to go, too.
Yeah. Steve, thank you.
Thanks.
And coming up, what's at stake for NVIDIA as the company's AI Developers Conference kicks off? We're going to speak with an analyst. Stay tuned. Squawk Box. We'll be right back.
Yeah, personally, I just think it's embarrassing for Apple. I'm not very enthusiastic about Apple borrowing basically from Google. Personally, I was really excited about this idea that Apple's going to release their own AI in-house. Maybe it's time to buy the dip on Apple. You're bouncing off the 169. Time to go buy the dippy doodla. And this actually disappoints me more. Mostly because I think the next phase of investing is not the chipset side. The next phase for the AI stock rally is figuring out who's actually going to make real money off of AI. Now, there are some companies that have done AI before AI was cool. Tesla, Palantir, Snowflake. But now everybody's utilizing AI to become more efficient. I think one of the ways you could see AI become more efficient, or rather businesses, is in logistics, in healthcare, but how these translate to revenues, or more revenues rather, than just lower expenses, higher margins, TBD. And I think that's what makes it so hard to predict where to place your money on AI bets. And one of the reasons why we always go back to the picks and shovels play of chips. It's one of the reasons I've kept my exposure and increased my exposure since the AI world, so to speak, to chip plays. Now, that's not to say I haven't taken a little bit of tendies, tiny little bit of tendies, but I've definitely increased my exposure since chips time, and still hold it versus the interest rate sensitive sectors, which I still think, unfortunately, are in a world of hurt. The Fed meeting this Wednesday should set us up for a little soft tugging, not a full rugging. That's my take. Soft tugging, not a full rugging. I like that. Okay, so what else? Tesla is obviously up 4.2% here in the pre-market. So there are a few potential reasons for this. Number one, you've got NVIDIA and the NVIDIA week this week, which is likely to, again, create this sort of buy the rumor, sell the news event. Wouldn't be a surprise for me. So you've got a broader-based tech rally. That's not surprising. It's one of the reasons why last week I'm like, yeah, I'm not going to go into next week short Tesla. So I'm not. I'm short nothing right now. In fact, I talked about that yesterday. People were commenting like, what shorts do you have left? I went into this week with no shorts because I figured the date maybe to load up on shorts would be either Monday or Tuesday. So we'll see. Sure enough, they're turning green. Usually you want to buy a short on green. So we'll see. I think that's going to be what we're paying attention to. And then I've got a whole list of names that we're going to be talking about, especially in the course member lives. But anyway, so the other thing that you've got is you've got FSD 12.3 with Tesla. It's pretty good. I have to hand it to him. It fixed a lot of the annoyances of 12 and 12.1. I don't think it changes vehicle sales a lick, but it does indicate that maybe we're getting finally some real improvements here. So that's very exciting. Let's listen in here.
There's a likelihood, and it's all math, right? It's arithmetically possible to go from 3 dots to 2 dots. But the big picture for us is the Fed actually puts those dots out there for information and forward guidance. But let's be clear, they haven't followed those dots, right? The cuts that we had were emergency cuts. There was no dot plot saying post-COVID they were going to do emergency cuts. And on the way back up as well, they were more aggressive than the dot plot suggested, doing 50s, 75s to catch inflation. So the dot plot's helpful, but we don't think that it's something that you have to be super concerned about if you see 3 dots go to 2.
But it does suggest that inflation is a bigger problem. We've seen the higher numbers with the PCE and with the PPI and the CPI numbers recently. If the dots change, that's going to suggest to people that the Fed is more worried that inflation has not been cured yet.
Yeah, so it is absolutely in a correct downward trend, right? It is working. And I think if you look outside the window, we are in a soft landing. This is actually happening, and we're seeing the numbers come down. January, we're definitely hot inflation prints. February, not as hot, but still maybe not exactly where the market wanted it. But the trend is in the right place. And that's why on Wednesday, it's really important to look at the estimates that we'll also get from the Fed and listen to the rhetoric. What Powell says will be very important. We think he's going to continue with the message that inflation is trending in the right direction. But this isn't a straight, easy path, right? It's going to be a little bit bumpy.
Like the odds are you will get a little more hawkish commentary than you did when he spoke before.
You have to with how loose financial conditions are.
But the Senate, when he was speaking before the Senate, when he said it feels like it's coming sooner rather than later, essentially. If I were trying to measure with some very specific seismic reading, I might turn it up a little more towards hawkish to say I expect that he's not going to say quite as much.
Well, I think he gave himself a really good space there. And why I say that is because the Fed introduced a new metric, which is confidence, right? And back to precision, confidence isn't something you can have with precision or knowing how somebody else feels in terms of their confidence. So I think Powell gave himself the space to be really open in this meeting and in the messaging. And that's good because they're data dependent and the data is really moving.
For fixed income, it's a pretty open market. There is liquidity, whether you are investment grade or even maybe junk bond status at this point right now. The market's pretty open, right?
Yeah, the market's wide open. Actually, a lot of sell-side firms are bringing up their estimates for what they think is going to happen in terms of issuance, meaning it's so wide open and levels have become more attractive or companies can wrap their heads around cost of capital that probably more companies are going to come to market rather than less. But yes, the markets are really open. They're liquid. For us, the real opportunity here is not buying the market writ large. It's about finding the different pockets of value in the market. And we're active managers, and that's what we do.
So where are they?
Well, some interesting areas are structured product. We really like structured product. That's an area that people were nervous about last year, specifically commercial real estate. I think as there's some more clarity around the cost of capital going forward, we do think that the Fed is going to start cutting in June. That gives some foresight or some insight into where your cost of capital is in the future. And I think we're seeing all these markets really normalize. The labor market's normalizing, inflation is downward trending. And the biggest thing, and that is like the pot of gold right now in the economy, is that the economy is super strong. It's more robust and more resilient at these high interest costs than anyone anticipated.
With a really strong economy and fixed income markets that are wide open for just about anybody who wants money, that's not an argument for cutting rates.
Well, it's not an argument for cutting a lot. And I think that's the big shift that we need to wrap our heads around, which is this could just be a more shallow cycle. It doesn't mean that the Fed doesn't cut. They just don't have to cut as much. And I think that's the important thing.
Well, that is actually something that makes me very nervous. That's exactly the thing that makes me nervous about the interest rate sensitive is, so what, even if we end up at 4.5% by the end of next year, it's not enough to really spur the old growth that we've had.
So it's not just gangbusters growth, no problem whatsoever in the economy. We do have a soft landing, but things can change. And so it is important, I think, for them to begin the process of getting to the rate that they tell us is the neutral rate, which they are not at right now.
No, I think they're still deciding what the neutral rate is, though.
Yes, and I think we'll hear potentially a little bit about that on Wednesday as well. So this isn't a meeting where we're going to have certainly not a hike, definitely not a cut, but we are going to get a lot of information about how they're thinking. And to your point, I think that long-term rate, the neutral rate, is probably a little bit higher as going forward, inflation is going to be at a higher level than we've probably experienced for the past 15 years on average.
Thank you, Lindsay.
Thank you.
Up next, United Steelworkers President David.
Yeah, I think she's pretty right on in terms of going from 3 cuts to forecasting 2. I think, honestly, at this point, that's almost a foregone conclusion. We've talked about it a lot. And again, I think you get the tuggin', not the ruggin'. And they have to do that because, again, like we talked about in yesterday's video, if you go too aggressive, what happens? You break something and you end up in a situation where you're forced to cut, which you don't want to do if you're J-Powell. Now, next thing I'm watching is Bitcoin. Bitcoin right here is a 68,288. You've got this trend line that we beautifully bounced off yesterday that we also talked about in yesterday's video. Right now, we are getting rejected by that Fibby. The all-time high, well, previous all-time high, 69 Fib. And so let's see if we can break through that on BTC. I'm actually surprised that BTC is only up about 4.6% this morning, when it does look like you have a larger NASDAQ-based rally going into the day. We'll see how robust it is. Look at this NASDAQ rally. Hold on a sec. Wait a second here. This chart's messed up. One sec. There we go. Look at the NASDAQ rally here pre-market. So you've got 881 running up to about 903 here in pre-market. I want to see how sticky that is when we actually open. We open for business this morning. So that's going to be entertaining. Let's see here. I wonder if I can also... Okay, yeah, I'll fix that in a moment. Yeah, I have this new... I'm kind of excited by it. I figured out, finally, how to, in addition to being up with all these Macs, and our boy Steve would be happy about this, figured out how to also have windows up, which is like crazy. But now I just have to figure out what I want to do with that, because there's so much that we can do with that. I'll show you one of the things in just a second here. Did you know you could just do Windows tab and it opens up like all these crazy different desktops? It's so cool. Let me see if this actually works.
Jensen wearing his black leather jacket.
I love how Dan talks about this. It's like a wizard putting on a cloak.
I love
Leather
him.
jacket goes on.
Yeah.
Talk up the stock, another $200 billion.
The godfather of all AI.
Just like that. That conversation up next.
They're talking about Dan Ives. Because Dan Ives always wears these crazy jackets, and they're like, oh yeah, he wears the crazy jackets. He's got he's gonna have another pump set for him. Now, something cool that I think I can do with this is I can actually go into the history here and just pick different people to kind of listen to. So let me see if that works.
Pre-market by more than 2%. A developers conference kicking off this week. Already this morning, Ben Lader of eToro, we asked him what's the bigger issue this week, Jensen or Jay? He said Jensen. Didn't even hesitate. It's all about NVIDIA for him.
If they underperform in some capacity, which evidently is sort of an anathema to recent history, there is this question of how much that could potentially cause some sort of drawdown in equity markets. What could he say other than we've got tons of new products, take a look at all the enthusiasm, it will change the world, and boom, stocks go up another 10%.
2 weeks of losses, not much of a drawdown, let's put it that way. Even in the face of this, a real repricing of the bond market. Check out the 2-year and the 10-year. The 10-year back in the 430s. 430.
Yeah. Well, they kind of punted on that. That wasn't too insightful. Okay. I wanted to see the actual interview. Anyway, I'll play around with that. But it's kind of cool. Now we got more computers to switch to.
Resulting from this transaction. Joining us now, David McCall, United Steelworkers Union.
No steelworkers. Sorry. What's the union gonna say? The union. I feel like we're talking like Civil War. The Union versus the South. All right. So let's take a look at what's actually losing this morning. Very little is losing this morning, as there appears to be some real enthusiasm going into this week, especially the good old NVIDIA event. Now, keep in mind, the NVIDIA event starts, we're going to have a keynote event coming out at 1 p.m. The event is 3 days long, and it's sort of a combination of things. It's a combination of virtual and actually here, it looks like they're having a little spiel on it right now. Let me listen in here.
Pinned on the future of AI. What do you make of Apple looking externally for AI solutions?
Oh, yeah, it's sad.
There's two sides to this, really. On the one hand, you've got what it says about Apple's AI efforts in-house. The implication of that, clearly, they aren't progressing very well, at least as well as perhaps the company would expect.
Yep.
But the other piece of it is, of course, what they're able to offer their customers. And if they're going to keep the iPhone as the dominant smartphone globally, they probably do need to be having something in this generative AI space. Google clearly has a very good product in this space, so it does solve a problem for Apple. It's interesting to see the shares in the pre-market don't seem to have moved a huge amount, so perhaps balancing those two things is what's going on. The thing that will be really interesting will be the extent to which Apple decides to pivot over the years. If they do end up taking Gemini, and there were also talks with OpenAI, Mark Gurman's reporting, do they, after a few years, develop their own product which ultimately replaces it, or will they just go all in on this?
How excited are you about the NVIDIA conference and the speech from the co-founder today?
I'm not sure excited is quite the right word. Yeah, I'm buzzing. Look, it's amazing, actually, how, a year ago, certainly 2 years ago, we'd barely have blinked at this conference, and now it is becoming pretty significant. Some investors, perhaps a little too optimistically, putting it in a similar bracket to those Apple conferences, WWDC, the iPhone launch.
They're like single-handedly supporting the whole equity market in the U.S.
Yeah, I think I've answered this one like 3 times already. No, I went into this week with no short positions on anything, mostly because I wanted to open my shorts again Monday or Tuesday, expecting to see some green. Here we go. Sure enough. So it's getting pretty juicy. As far as the event, you have usually it's about a 2-hour keynote. So I just verified the keynote today, which is, again, March 18th. We know that. The keynote today is set for 1 to 3 p.m. 1 to 3 p.m. is what we're looking for the good old keynote. So let's listen in here to get another comment on this. You can kind of jump around at time a little bit, which is fast forwarding a little bit.
And what they can do, the B100, which people know is coming, but
yeah, after the H100, right? H100, H200, B100.
How optimistic the investors are about it meeting these incredibly ambitious targets that analysts are setting for it. It is clearly trading at a hefty old premium, but hefty old numbers. It's 35 times its forward earnings at the moment. That's not massively out of kilter with names like Microsoft. It still trades actually at a bit of a discount to AMD. That's partly because AMD's earnings haven't yet been, the estimates haven't gone up to meet the expectations where the stock is at. So the thing will be fascinating to see how similar this thing is to, say, an Apple event. I mean from a trading perspective, because quite often what you see with an Apple event is a bit of profit-taking. The adage is you buy the rumor and you sell the news. Well, there's been a little bit of a sell-off in NVIDIA over the past few days. Sometimes good news actually doesn't deliver the pop in the shares that you might expect, because people think, oh, well, actually, it may not get much better than this right now, and so you see a bit of a sell-off. So it'll be fascinating on many different levels.
That's a strong point. So, Alex, let's talk about an Apple event. The reporting from the team here at Bloomberg, fantastic reporting that Apple is in talks to build Google's Gemini AI engine into the iPhone. We had some commentary from a good friend.
Yeah, on this, by the way, Microsoft is down 1%, which I think is funny because, Google is up big on this. So Google up about, I think Google's up 4%. Microsoft is down 1%. Yeah, Google is up now 5%. Apple up 93 basis points. Microsoft down 1%. That's very interesting. So what you're really seeing is the market is actually really concerned about that damage that Apple finally getting into AI could do for Microsoft, which is surprising because Apple doesn't appear to actually have any proprietary AI based on what we're hearing this morning. Yikes.
3 years where you can properly engage with an AI engine conversationally, that might be a significant differentiator when it comes to people deciding what handset they're going to buy. So Apple, clearly is a defensive move to ensure that they have this tech in their devices, and they are handing over what could be a very significant part of that proposition to what is, frankly, in mobile operating systems, a meaningful competitor in the form of Google.
Alex,
yeah, no kidding. Oh, geez.
That a lot of regulators are not going to like the fact that two of the biggest companies in the world are teaming up to be.
This, by the way, is actually, I agree, great for Google. Because the concern with Google is, their Google search revenue will plummet. But if they can offset that with AI data, licensing revenues, that's great.
Basis. We don't fully know actually how this is going to push people towards a similar thing. The way that AI is being monetized is still kind of being worked out. It's very much a cloud product at the moment. The people providing these systems are making money from selling the cloud services. So it's a slightly different case from Google being the default search engine in iOS. Doesn't mean, of course, that the regulators won't look at it, but it isn't. You'll excuse the pun, apples for apples.
Alex, I want to finish on Google because they've had a difficult time, and I did get the pun. We'll let that go. I want to talk about Gemini. Alex, it hasn't been a good start for Google unveiling and rolling this out, and I guess my question would be...
So, by the way, the 10-year bond is up to 4.326%. It's up another 2.2 basis points. You are seeing financial conditions slightly tighten this morning. And at least now, sorry, not this morning. That's based on Friday's data. Friday's data, we got a little bit of a tightening in financial conditions. Still pretty low, but I think one of the reasons you're seeing some of this tightness is or a little bit of tightness returning is mostly because you had a little bit of a sell-off at the end of last week, and then we've also seen yields come back up. So that does help do a little bit of the J-POW work for him. But again, still got to work on making sure those financial conditions don't loosen even more.
The NVIDIA Developers Conference a little bit later today and talking about that potential partnership between Apple and Alphabet. Alphabet in the pre-market celebrating that win, if that is one, up by something like 5%. Here's a win for us. Surveillance on tour tomorrow. Fantastic lineup. We'll be taking the show live to the Bank of America trading floor. Here's the lineup for you. The CEO, Brian Moynihan, Mark Cabana, the head of US rate strategy. We'll catch up with Savita Subramaniam, the head of US equity strategy, Mike Gapin, the head of economics, and a whole lot more across 3 hours of programming, Bramo, starting 6 Eastern tomorrow morning.
I'm so looking forward to it, especially given the fact that we are heading into such a massive week, and to get sort of a bird's eye view on the different components of an economy very much in flux will be terrific.
Well, and I do want to say, as you go into this crazy week, something to keep in mind is that this potential slight softening, or I should rather say, a tightening of credit conditions or financial conditions, does help contribute Jerome Powell to essentially be in a position of, okay, yeah, we maybe don't have to hawk as much. But there's a problem with this, and it's not great. The problem with this is if the stock market rallies going into this meeting, then you're in a situation where you ultimately have a Fed that says, okay, am I really going to have to be a little more hawkish, because you drive those financial conditions down again in terms of looser. So take a look at this closely, and this will make more sense. This is the financial conditions index chart. If you zoom in right here, this is on ehack.com. So if you want to catch up, you want a summary of what's gone on so far, ehack.com. I've been writing a lot of kind of comments here, and we'll sort of keep this updated. So this is Friday. I mean, this is obviously a volatile chart. It's never just straight down, right? But we did get a little bit of pop in financial tightness. Why? Stock market down, bonds up. That helps contribute to tightness. Great. That's what Jay Powell's going to want. But look at that relative level. You are still at a substantial low for the entire year, which might be okay because, as Jay Powell has said, some of the risks are becoming more balanced. But does it line up or does it tee up Jay Powell when you have the loosest financial conditions since 2014 and 18, excluding COVID? Does it tee up Powell for big dovishness this week? I don't think so. I don't think so at all. So I think this week's going to be really entertaining. Tough thing's going to be figuring out how to play it. Again, I'm going into this week with no shorts at all, but I'm very enthusiastic to see how the week goes.
Coca-Cola actually outperformed everyone else. So who's going to be that next Coca-Cola in the age of AI? It's also, where are they going to grow next, right? Data centers are pretty much capped. And so the question is, how's that sovereign AI strategy going to work out? How well are they going to do there? And then, of course, just trying to understand that next order of, the chips that they're building are so complicated. There's a 2-die configuration that's potentially being used here that no other company is going to be able to get to. And that's really going to be what are the other order effects, TSMC, Supermicro, and other chip manufacturers, if they can even catch up.
Not to mention what they're going to be doing for China. There is the possibility that they'll announce a new chip for China as well.
Of course, and they're going to produce another chip that's going to be less power, more constrained, but it'll be interesting to see if China's interested in those chips at all.
Okay, Ray, thank you for joining us ahead of that.
Thank you.
Okay, so the B100's replacing the H100.
Yes.
And it's a 3-nanometer. Holy moly.
Well, remember, it's H100, H200, B100. This is like, we already know about that. So I don't know how enthusiastic that could be. I'm actually personally enthusiastic about Google. Google taking this, if they pull it off, this partnership with Apple, such a win for Google. Such a massive win for Google.
Pitching in as well. 10 years at about 4.3%. It's Fed Day.
No, Gonner Lep. I closed my Tesla shorts on Friday. I've been talking about that already. You gotta pay attention. Wait, did I even hold it into Friday? I think I actually closed it right before, like minutes before the bell Thursday. Yeah, I was already out of my, like, you gotta be, some of them, when you get a 50% tendy, you gotta take it. You can't diamond hand that on a week and a half option. You could always reopen. I think that's the big thing people forget when they're trading. It's like, you just take it. When you got a big profit, take a profit. And then just reopen if you want. You can always reopen. And so that's what we're waiting for now. And I think this is setting up for a nice tee up here, because I don't think Apple's delivery numbers, or sorry, Tesla's delivery numbers all of a sudden got a whole lot better over the weekend. They didn't.
Where issues on some of their planes, and that's grounded hundreds of planes as well.
Charlie, I mean, there's also Bloomberg, of course, headline crossing the terminal saying cocoa futures have doubled from the start of 2024. I mean, without specifically talking about cocoa, it just goes to certain markets being quite hot, including coffee.
It really is. I mean, I love chocolate as well, and I think we've seen in some of these markets, Cote d'Ivoire and Ghana.
Cocoa futures, I don't know that I care. I'm not a commodities guy. Sorry, I know some people do out here, which is fine. Commodities, Steve. Got to give the guy credit where credit's due. Yeah, let's see here. Why would Apple use Google for AI? That seems bearish for Apple. Totally. That's the same opinion that I have. Same opinion. It's amazing. So it's definitely bearish. All right, let's listen in here.
So that's coming up a few minutes from now. But let's start off, Jim, with, of course, big tech, AI, NVIDIA. You're there. We can't wait for your big interview tomorrow. But what are your expectations for today?
Okay, so today I think there are a lot of people trying to game this event. This is an event that if people look at it, there is a keynote that Jensen gives, and there's actually a countdown clock on the site.
It's on their website. It's like 5.5 hours to go. Actually, at this point, it's probably more like 5? No, 6? Wait, where's the 7? Hold on, let me look at the clock. It's at 1 p.m., whatever it is.
Get out of that game. He won't let you know until it starts. It's all a secret. That's how he does it. Is he a dramatic guy? In the New Yorker piece I told you to read about, he does not regard himself as a classically great speaker, but today he delivers. And I think that we will be surprised because he does not let himself be gamed. I think people have to start recognizing that.
Okay. So that being said, and secretive though he may be, you got to tell us at least what some of your expectations may be. Certainly there are at least questions that many people think are going to be addressed, Jim, and I'm curious as to what you think they are.
Okay, so I think that what will be addressed is not necessarily the total addressable market in terms of what number it'll be, but it'll be about biology. It'll be about healthcare. It will be about finance. It will be about auto. It will be about manufacturing. And yes, it'll also be about accelerated computing and generative AI. So what I'm saying is it's going to go vertical. And if you look at all the different...
Boring. Kevin Hassett? Oh, wow, look at this. I remember this guy. Is he coming on? I just saw Kevin Hassett face pop up. And I'm like, I remember him from the Trump admin.
Future might look like in a changed political landscape. We've got the Wall Street Journal reporting that Donald Trump has been presented with 3 names as the possible replacements for Jay Powell if he becomes president and if there was an interruption.
Ooh, new strike and date for ARM. Yeah, that's another one. So I closed ARM as well, also buy rumor, sell news. And ARM was down 3 and a bit on Friday. I'm watching this one as well. This is, let's see what we get off this NVIDIA event. There is a big concern. I don't think it's highly likely, but there is a slight concern that what happens if this event is a total dud? And people come out and they go, got it. H100 is now B100 after the H200. Okay. Sell. We'll see.
85 at the time that there is an opening on the Fed, and he is against tariffs. So I'm not sure that one totally fits with Donald Trump, but I wouldn't pay a whole lot of attention to this. The current chairman's term runs until January of 2026. So it's going to be quite some time before anybody is going to be named to replace him one way or the other.
Okay, Mike, interesting kite flying by the Journal. Mike McKee there on the week ahead. Let's start the conversation with BlackRock's Amanda Lynham and Toll Balkan's Michael Purvis joining me here in the studio. Michael, to you first of all. It's been a while since we've had a human in the studio, so welcome. Good to see you, Amanda. Good to see you as well. The acknowledgement could be that the disinflation narrative is slowing down, and therefore there is merit in cutting the dots, the median dot.
Yes, for sure.
To two. It wouldn't take much to do it. Do you think that that would be good, prudent governance to shove the market down to 50 basis points?
Yes.
Look, I think it's an irony that crude bottomed in this, over the last 6 months. It bottomed on the same day that the Fed's December FOMC occurred, when they really delivered that dovish surprise here. And since that dovish surprise, we've seen a wide range of inflation data come in hotter than expected. We've seen a wide range of economic data, exhibit continued persistence and be hotter than expected here. So I think what the Fed seems to be signaling from December is that it was a pivot from hiking to something that's either static or cuts if warranted. And so what warrants the cuts? I think it's going to be, I don't think Powell's going to shoot until he sees the white of real disinflation eyes here. And the reality is
don't shoot until you see the whites of their eyes. This is like isn't that a Revolutionary War reference? Isn't that the War of Bunker Hill? I'm pretty sure that's Bunker Hill.
Target, if you look at the monthly sequential prints across a wide range of the subcomponents there. So I think
Battle of, by the way.
Signal on Wednesday will cut when warranted, but right now it's not warranted.
So they want to see the whites of the eyes of the disinflation returning again. Amanda, good morning. Good to have you with me. Kicking off a big central bank week, but let's focus in on the Fed first of all. This disinflation.
No way. I freaking nailed it. No way. Look at this. Don't fire until you see the whites of their eyes is one of the most famous quotes coming out of the Revolutionary War. I mean, like, obviously everybody learns about this, but I can't believe I remember this. It's like one of the few things I feel like I actually remember from history. Battle of Bunker Hill. That's freaking cool. I love stuff like that. All right. So somebody here has an interesting comment. Somebody suggests, hey, is it possible that you could end up seeing Apple actually get Google get a boost to their AI with millions of potential Apple users? Yes, look, this is a massive, massive win for Google. Now remember, it hasn't happened yet, so we have to be careful. There's a lot of enthusiasm around that for Google, as there should be. It is embarrassing for Apple. It is like Steve Jobs would be rolling over in his grave right now. What a freaking embarrassment for Apple. Are you kidding me? Like, we're at the 1 year anniversary of AI, and what do you have to show for, like, of the recent AI? I mean, we've known about big data for a long time, but we're at the 1 year anniversary, and what do you have to show for it after a year? Hey, Google, can you throw us a lifeline? That's embarrassing. I'm slightly disgusted by Apple on this one. But yes, yeah. Big win for Google there. Big win. Mel Gibson's coming for you. The Patriots, freaking amazing. So in us, we learned that. Is that Austria or Australia? How am I supposed to know? It's probably Australia. I feel like an Australian would say Aus. I don't know. I don't know though. All right, let's listen in here.
$20 billion a year to be the default search engine on the iPhone. And we've been waiting for what Apple is going to do when it comes to generative AI. We're still obviously waiting for that. What are your thoughts here on the story?
Well, this is huge because a lot of people thought that the next iteration.
Tony says, what made you close your Apple put or Tesla puts last week? The fact that it was up 50% in like 24 hours. I'm like, okay. I wasn't expecting to close it. If I thought I was going to close it that quickly, I would have gone for the 0 days because the profit would have been like 5x. Obviously, the risk would have been 5x. But if I thought it was going to move that quickly, I would have gone for Friday. I went for Friday of this week, but I did close thinking, okay, if you're going to get a big drop like that on Tesla, you're going to get a tactical bounce. That's obvious. Just re-short it on the bounce. Well, now we're bouncing, so let's see what it does. I don't think nothing fundamentally has moved over the weekend. Well, V12 is great, but that doesn't change anything for revenues yet.
Forces that are creeping through at a slow and kind of somewhat convoluted pace, but they're persisting, and that a lot of it comes down to various supply. Whether you can talk about labor, you could talk about shelter, and also even commodities, as we're starting to see. There's a big supply dimension to all those things that really doesn't have anything to do with COVID, but they are slower moving forces there. So my view here, look, I've been officially at the 1 to 2 cuts this year, but I think there's a real scenario of 0 cuts that seems to be.
Somebody here says I'm too biased against Apple on this one. I was actually preparing to start buying the dip more on Apple, and this, frankly, is embarrassing in my opinion. It's not being too biased in my opinion. I think I don't like Gemini. Gemini sucks. Go use Gemini. Use it versus GPT. It doesn't hold a freaking candle. So not only does Apple admit that they have nothing, here it is, it's for Brian. Not only does Apple admit that they have nothing, but they actually go for the sloppy second. They don't even go for the good one. The good one is GPT, not Google's. Google sucks. Google's like the worst out of all of them. It's the worst you could have picked, I feel like. That's my take, at least.
But I want to revert back to where you said, you talked about investment grade and high yield, those spreads being tight. If there's a risk, as Michael says...
I don't think it's possible that Apple has recognized that creating AI is a cost sink. When, think about what Elon just pulled off. He built Grok in 3 months? Now, I get it. It's Elon. Mad respect for the guy. I think it's great. But it goes to show what's possible. What? Apple can't do what Elon did? Crazy. It's crazy to think that Apple can't do what Elon did. Now, Apple couldn't do what Elon did with cars. So maybe that's just end game for Apple. They just can't keep up. But they should be able to create an LLM and AI products. So it's embarrassing.
That velocity in getting to that higher rate move is not extreme. But if it is because of persistent inflation and a resurgence of stagflation concerns, that is typically not a backdrop that corporate credit likes. To the point on spreads, they do look optically tight, but I think it's important to note that we're actually still wide to the mid-2021 levels. So there is some scope for further tightening again.
No, Yeti. I understand where you're coming from. But Apple hasn't been known. But Apple hasn't been known to take things from companies. Any successful app ends up being an anything. I think you're saying Apple has been known for that. Okay, let's be clear. Siri was an app in the Apple App Store. They bought Siri back. It was like in 2009. I want to say it was 2009 or 10. They bought Siri. I remember using the app Siri before Apple integrated it. But anyway, can Apple do that to Gemini? Not really. That's like saying Apple's going to be able to take Google from Google, like Google Search and the iPhones. No, they didn't. They can't. There's no way. I don't see that. It's a good question. Don't see it at all. So I always like to be transparent. Yeah, my goal isn't to tell you things you want to hear. I think there's a lot. There's actually a big reason, there's a big strategy on social media to just tell people what they want to hear because it doesn't alienate any followers. You put people in an echo chamber, everybody's on the same page, everybody agrees every day. That's not me. I'm never going to do that. Even if I'm wrong, I'm going to give you my opinion. All right. I want to look at this. This is a Mike Wilson piece. So I love seeing the, oops, sorry, one sec. I love seeing the Mike Wilson pieces, and I want to see today, with 15 minutes to go for the bell, what Mike Wilson has for us. So let's push the right button. Will this week's Fed and BOJ meetings bring central bank policy back in focus for stock valuations? We observe a recent broadening in large cap performance regarding everything, basically. Strongest breath, basically everything. While almost all of the equity market rally late last year was attributable to lower rates, stocks are now trying to move past their dependence on central bank policy. This week's Fed and BOJ meetings will be important tests. We view 4.35 on the 10-year yield as an important technical level, while we watch for signs that rate sensitivity may increase for equities. That would be bad. Higher rate sensitivity would be bad for equities. While large caps have exhibited declining rate sensitivity over the past few months, the correlation of small cap performance versus interest rates remains meaningfully negative. Okay, recent broadening with large cap leadership, how the market is dealing, blah, blah, blah. Where's the breadth moving? Bottom line, breadth has improved. Basically, the rally widens out. This sector continues to show relative performance strength against consumer cyclicals, which is typical in a late cycle backdrop. Cyclicals are things like manufacturing, by the way. Typical in a late cycle backdrop. That's not great because it means more pain potentially still ahead. Airlines, air freight, machinery, and building products have the relative cheapest valuations. Ground transportation, construction engineer look most expensive. Fine. Okay, what else? Is that it? There's gotta be more here. Rates back in focus. The bond market. What do we got here? Rally since October has largely been driven by multiple expansion. Totally agree with that. Pretty dovish J-Pow there. Softer economic growth data should support 10-year. Fine. There's also a question of supply. That's fine. That's bond supply. That's fine. All right. Let's see here. Small caps, less breadth. So less overall gains in the smalls. Yeah, I think Matterport's like at an all-time low. I was looking at Matterport a little bit yesterday. I'm like, should you buy the Matterport Pro 3? What is he overweight on? Coca-Cola, McDonald's, Colgate. Ew, Verizon. Gross. I really dislike Verizon. Their customer service sucks. The company's like totally trash. I've never seen a customer service company, related company that's so trash. Anyway, sorry, rant over on Verizon. Personal experience. Anyway, interesting. I wonder what McDonald's has been up to. Let's take a look at that. MCD. Okay, let's go here. Mickey D's. No, AT&T's is pretty bad. Verizon's kind of worse. Xfinity, Spectra, they're pretty bad too, man. They're pretty bad. So here's McDonald's. So you had a dipply doodla in October there. Yeah. Anyway, the Matterport Pro 3. I was like, what's going to convince me to buy the Matterport Pro 3? And then I evaluate the Matterport Pro 3 and I'm like, nothing. First of all, I'm on a legacy plan, which means my hosting, the hosting that we have for HouseHack is like way cheaper than the current day pricing, which is awesome. So we locked in, 5-year-old pricing basically at Matterport for HouseHack, which is great. But if we upgrade to the new camera, they force you onto the new subscription model, which sucks. And then I'm like, okay, well, what's the value to the new camera? Nothing. Like, the quality looks the same. I hate to say it. The quality looks almost the same, which is pathetic. Not only does the quality almost look the same, but the battery life is way worse on the new camera. So I'm like, wow. What did you guys innovate? It's like 10% faster per scan? Stupid. Totally stupid. So I was like, Matterport keeps going down this direction of marketing digital twins. Nobody understands or cares about that. Like, people don't want a twin. A digital twin. I don't think that's a selling feature. I think the marketing is totally off on Matterport. You have to really prove value. Hey, real estate agents, you'll sell your properties quicker and get more money. Hey, contractors, you could document your work better. Insurance companies, you should be on every site claim getting progress scans, regular updates on what these properties look like as opposed to sending people out. Whatever. I'm not a Matterport. Yes, I know, you could scan outside. You're right. It's slightly faster. You could scan outside. Not worth the money.
Credit market is owned by foreign investors. You can see that clearly in the...
Yeah, why would Apple buy Matterport when they have LiDAR already built into the back of the phone? The back of the phone already has LiDAR built in. You don't need another camera.
Particular, Japanese investors have been net buyers of credit alongside foreign investors more broadly. The normalization and I would say the beginning of what might be a hiking cycle from the Bank of Japan has caused investors to ask whether that participation appetite for U.S. dollar corporate credit could shift. We think that.
Yeah. Okay. Far Real here says, can you provide some intel on what you missed on some of the interest rate sensitive stocks? Yeah, so I think that was a big mistake, obviously. It was driven by the belief that inflation would fall rapidly, which it did. It did through the summer of 2023 as we lapped the 9% comps. That was correct. That ended up continuing to be correct until about September, October. Unfortunately, once we got into 2024, labor data and inflation data for the start of the year has come in substantially worse than expected. And so it's really igniting these fears of a second wave of inflation and rates basically high with I don't believe this phrase, but basically the fear of rates high forever. That this is somehow a new paradigm, that we're not going back to the way rates used to be. That's a really big problem for the interest rate sensitive sector. Really big. My bets on interest rate sensitive were based on the strong belief that inflation would come down, which it did, but it would continue its pace and the Fed would be able to normalize rapidly. Well, I think that's turning into the Fed is going to maybe normalize, but very slowly, because they're going to keep the ballast, so to speak, the valve of being able to cut rates if they need to, if something breaks. The other issue is I thought we'd see a lot more unemployment by now, driving rate cuts. And I thought we'd also probably be in a recession by now, which is shocking. At least that's what I thought, back in 2022. So there's been a long evolution where it's like, okay, we're not going to get a recession. We're not going to get a wage price spiral. Okay, that's great. Then inflation's going to fall. Okay, fantastic. Inflation's falling. Great. It's falling rapidly. Oh no, it's stopped. It stopped falling. That's the big problem for the interest rate sensitive, because you need rates to plummet. You can't do autos at these rates. It's crazy. So yeah, it's unfortunate, but I think there's still more pain to go, because I don't think the market has realized yet how long we can actually stay high. Now, if something starts breaking, it'll be a catalyst to buy interest rate sensitives, because the Fed will cut really quickly. That'll be your catalyst. You gotta have something break. Recession would actually be good for interest rate sensitive. Job loss would be good for interest rate sensitive, because it would finally tell the Fed they've gone too far.
All right, there you go. Coming up, it's a West Coast edition of Jim's Mad Dash. We'll count down to an opening bell as well, which is about 6.5 minutes from now. Stay with us.
All right. Someone says here it's not a new paradigm, it's a return to norm. I don't think so, but we can fact check this. FOMC rate, and we want to go all the way back to like the 50s. Okay, let's do it together. This button. I changed all my buttons around. So, oh, look at that. Back to the 50s. Okay. This right here. Okay, hold on. I'm going to take a screenshot of this. It's going to make more sense when we can play with this chart. But this is not a return to the norm. I'm going to show you what the norm is. I respectfully disagree with you, Anthony. You are wrong. That's just my opinion. I could be wrong too. All right. That's the wrong button. What are we going to do? Watch. Very simple. This is what we've had. The great moderation. Hold on. This breakout is what people talk about when they see paradigm shift. Now, I understand. I know what you're thinking. I get it. I already know. You're going over here. Going, but Kevin, this. No. I don't think so. Mostly because we generally, in a capitalistic economy, disinflate. When we drag this back hundreds of years, the green will be true, not the red. So I think the red is wrong. Over the long term, capitalism deflates. Obviously, we offset that with money printing. So, you know, this is really just frankly being driven by the persistence of the strength of this economy. And again, that's a problem for the interest rate sensitives. Okay. Good. So, what else? Let's see. Let's go over here for a moment. And what do we got? Let's see. It's 26. Let's go here. Are we on? No? Fine then. We'll listen to someone else. What does this person have to say?
Yeah, that's right, Francine. We've just had the ministers walking in and taking some questions from...
Boring.
Able to deliver on its promises towards Ukraine, and therefore it's a great opportunity for Putin to double down on the war in Ukraine and sow division in the...
Putin wins his election. Look, it's all reporters.
So, Rosa, how would you characterize actually the EU right now? I know there's a lot of division, for example, because it's very difficult to get.
5th term. The guy's never going to get out of office. It's kind of funny. I don't know, actually. Is it funny? I don't know. It's kind of wild. But 5th term in office. That's crazy. Let's see if we can click around here. No? Still nothing? Okay, fine. How about here?
For EV. The EVs, maybe he was the first casualty, you tell me. The EVs depreciated rapidly, which therefore made it so that his fleet of Teslas was worth less than he thought. Maybe he thought that they would go up in value. Anyway, so he's leaving. Gil West is coming in. He's former COO of Delta, terrific guy. But it is, David, frankly, a defeat. It was initially very exciting, but the idea that you could somehow make it so you can trade cars like you can trade stocks and bonds did not work, and it was not fun for Stephen. That did matter. He was hoping to have a great time. His skill set was not correct in the end. Saw slowing in EVs, moving on. David, it's a shame because I thought Steve was going to do unbelievably well with this strategy. I, too, did not see the decline in value of the Teslas that hurt his company so much.
Yeah, well, you've talked about it. We have as well. Of course, that was a fateful decision. To go big in that area, and as to your point, when the values decline in the used car market, that had negative consequences. They've had so many different people run this company over the last 10 years, Jim.
Yeah, it's just not worked for anybody. Remember, it did go bankrupt, but it stayed. Yes. The stock continued to trade. David, I think it's just a very tough business. Because remember, travel has done well. We've seen cruise ships do very well. American Express obviously doing very well. Hotel chains doing very well. There's Expedia done okay. Bookings does really well. This did not take part in the great travel resurgence after COVID. And I think that maybe if you had just focused on that and not trading on cars.
They're early. That's you got another minute to go here before the bell. I'm just watching the SPY and the Qs in the pre-market. Let's take a look here. We've got SPY at 75 bips to the upside. You've got the Qs at 1.18. You've got NVIDIA up at 2.8. I want to see how robust this is going into the open. And I want to see the first moves, the first 10 minutes. I'm pretty excited about that. So are we going to go up or are we going to go down? Qs are somewhat implying maybe a little candle down, but you never know. The pre-market just doesn't tell you right. So we'll see. Obviously, Tesla's at 4%. We've talked about that. And so let's take a look at what happens. We got about 20 seconds to go. This will be very entertaining. Entertainment guaranteed, no matter what side you're on. Can Bitcoin give us a little heads up? Bitcoin still getting rejected over here, so a little sideways. All right, here we go.
It was a bust. Clearly not a bust. Maybe a resurgence for both.
All right, we've got to talk more about that as well.
Yeah. What a stock.
Anthony Bell here to take a look at the real-time exchange back at our headquarters, of course. Here at the big board, Elf Beauty celebrating the 20th anniversary of its founding. We're going to be talking to the company.
Okay, Q's going to try to move up here on the Q's. Q's are trying to move up 1.24. You've got SPY trying to move up. You've got Matterport's doing nothing. Google's trying to push right here. Look at that push on Google. Google's pushing. You've got 5.5% on Google. I'm gonna hand it to Google. They got it is so delicious this morning for Google. They just took Apple's face and rubbed it in the pie and moved it around. Apple actually rising here at the bell, 1.67. Not very. I'm honestly surprised people were rewarding Apple for this. Blows my mind. Nvidia rallies. Here he goes. Here goes. Here goes your pre GTC event rally. Buy the rumor, sell the news, baby. Here's the trade. Push it. Watch, this sucker's gonna be up even more. This one's looking juiced. Just gonna keep going into the event. You've got a 3-day event, remember. It culminates on Fed Day. It's part in person, part virtual, so it's like a hybrid event. Almost at 4% now on Nvidia. I could not, you cannot, in my opinion, short Nvidia, really, frankly, ever. But certainly not, in my opinion, until Wednesday. I don't even think I would be crazy enough to short that. Google, honestly, it's a win. It's a win for Google. I totally agree with the market's reaction on Google, and I will tell you when I disagree with the market. But this Google reaction, we're going to 152. I think you're up 7% today. And that's my take for Google. I think NAS, you could have a 2% day here. No problem at all. The Tesla rally, it's I don't know how sustainable it's going to be. Nothing happened over the weekend. That implies anything has fundamentally changed for Tesla. Yes, 12.3, I have it, is good. What does that do for car sales right now? Nothing. Then you've got Apple's going to knock on the 2% door over here. Enphase goes negative. That's your warning. That is your warning shot for interest rate sensitives right here. Enphase moving down. That probably means we've got S-Edge moving down as well. Solar sector. Yep, another percent. You've got, what else is moving here? Lemonade. Lemonade. Oh, Lemonade, by the way. That reminds me, since they do insurance. I keep getting asked by people, and I've never actually really addressed it. Did I really get my life insurance in those 5 minutes? You all know I'm sponsored, metkevin.com/life. Yes, it was so ridiculously easy. And the thing that made me love it so much was just Apple Pay for life insurance. I'm like, I wish I could Apple Pay for all insurance. Like in the future, homeowners insurance, everything. Instant Apple Pay. Oh, it'd be so much easier than like call an agent and all this. Maybe AI could get us there. AI can finally make it not suck like sign-up processes. Anyway, Disney's even up on this, 1.6 here. Disney's actually moving. Look at this. Hold on, let's go to the day chart here on Disney. Disney. Day chart on Disney. You're trending up here. Trending up on Diz. We already talked about the fake price increase for Tesla. It's a pull forward. It's not because demand is so high. People don't understand that. It's a pull forward. It's fine. It's because deliveries are so bad in Q1. They're like, please. Sorry. I'm bearish. Sorry. So we've got 1.8 here on Apple, trying to push to the 2s. And yeah, I think Google's going to 7%. It's continuing to push. So good job. Let's see here. Let's see. Can you do a life insurance course? I honestly, most people want to learn a lot about whole life. I'm not a whole life guy. I'm just going to be transparent. I'm not a big fan. I think a lot of the fees are very, very high. But yes, are there some really cool strategies? Absolutely. Are they for me? No. Are they for thee? Maybe. I don't know what your situation is. But I'm not much of a whole lifer. I'm a term lifer. So, yeah, anyway. Okay, so... yes, later I will release a Don Lemon video. Can you do a video for real estate agents since the Supreme Court ruling? I actually did. It's on the channel. Got like 150K views. It's doing pretty well. But the real estate industry has changed forever. That's, I think, the title of the video. And it's actually true. There it is. Google hit 7%. We saw that coming. Mr. Minister says, how's shorting Tesla doing for you? I guess you haven't been paying attention, so joke's on you. I am not short Tesla. Closed my Tesla short Thursday right before the bell. Took my 50% tendies. And congratulations, the stock is up 2.6%, and it's trending down. Does that really make a difference? No. 4% on Nvidia. This is buy the rumor, sell the news right here. This is actually news. Like Google, yes, Google. It makes me more interested in Google than Apple. And I hate saying that. Like, I love Apple. But I got mine. I got my Android. See? I could just join whatever team I'm on. Are we doing an iPhone video? What up, boys? It's your boy Apple. Doing a Google video. What up, boys? It's your Android. And I actually don't really use this that much. But I will say it takes some pretty sick photos. And I actually really like it. Like, I never thought I would have liked Android, but it's actually a pretty good device. Like, I can't really blame the green textures that much. It's not that bad. So, that bad. sorry.
Really begin to be an issue. We've discussed it.
Well,
we
that's
will
why I'm
continue
getting
to.
Prologis tonight.
But
they
Jim,
have $500 million in the data center.
A lot of these utilities and whatnot went up. The stock prices went up a lot, as though this is years to come in terms of being able to build the capacity that's needed. I mean, was that a justified move in many of those names?
No, not a justified move, because these companies have to find a lot of ways. They got to finance, and obviously rates went up. The stocks are not great buys. I think Sempra is, because Sempra's got a lot of very good natural gas. But
boring. I don't want to hear about your gas, Kramer. Not interested. Bye.
Yeah, an interesting story out of the Wall Street Journal reporting that last year, the two companies, they had discussed FedEx accepting returns of Amazon packages at their retail locations. This, of course, was according to people familiar with the matter. And while Amazon has a partnership with many companies, including with UPS, for example, the FedEx and Amazon talks, they ultimately didn't reach a deal. Now, remember, FedEx had a partnership with Amazon years ago, but in 2019, FedEx ended delivery contracts to move Amazon packages. And that was, of course, as Amazon's competitive and has only grown since. And it appears that these talks restarted last year as FedEx really seeks to boost parcel volumes. And that will be the storyline to follow this week when FedEx reports earnings. Analysts expect that revenue will shrink for a sixth straight quarter. That is before a potential pickup next quarter. Those earnings hit on Thursday afternoon, Manis, so stay tuned.
Okay, well, eyes down for that. It's going to be a busy week from the macro to the micro. Now, StoneX, I should say, are discussing the craziness of the stock market at the moment. This is what they've got to say. It's like being high on drugs. The markets take the best of the AI story, the best of the disinflation story, the best of the growth story, and project that forever. Quincy Crosby is my guest this morning from LPL Financial, joining me now.
Oh, Google hit that line, and it's getting rejected there. There you go. Look at that. You can't fight the lines. You can't fight the lines. They're right every freaking time. They're always right, the lines. Nobody knows the lines better than me, Kevin. You come here for the lines. We got our 7%. Boom, we got it rejected right away. Not a surprise. But I do think this is the start to a catalyst, a long-term catalyst for Google. If they can do AI data licensing for everyone, yes. What we need is more AI features in like Google Admin. I'll pay more. Like, honestly, I look at myself as just a user and I'm like, if you give me, and I know this is not Google, but like, go to a company like Intuit. If you could give me AI for reconciling QuickBooks, take my money. Please, take my money. And I think a lot of people are in the same place. So, JC here says, Kevin, you're so cringe. Thank you. Let's see. Can't fight the lines. Exactly. How do you see the gaming sector, Corsair? I don't know. You know, so many people got their new computers and setups in COVID. They're still pretty dang good. Let's see here. Let's see here. What are the lines saying about Enphase? Oh, do you really want to know? Where's Enphase? We just broke a pretty large support level, so it's not good. Next stop, if we get a full candle here, it's not negative $26. I'm out of lines. Unfortunately, I need to redraw the fibs to pull them down and recolor. We do have, I will say it does look like we've got a near-term trend line here. Look at this. I don't know if we're going to hold there. I hope we do. Just because I like the company. But you can't be emotional about this stuff. So what do you got over here? NVIDIA up 4.6 right now on this event. Are people not aware that the event is this week? And have people never heard of Buy the Rumor, Sell the News? I don't know. This is cooked up. Oh, this is going to be some juicy shorting potentially this Tuesday, Wednesday. I can't wait. I don't know, maybe today even. Let's keep listening in. I'm emotional about SoFi, says someone. Yeah, it's tough. You know, you become such a user of a company. You become such a believer in the company. And, you know, and then unfortunately, this is what the market says to your belief. You know, I know this is just on the minute charts. It's just 2% today, big deal. But, you know, here's your day chart on SoFi. The sucker just has not been able to get back to its all-time highs. It tried, and it's just been straight down another 30% since then. I don't dislike SoFi at all. I actually like SoFi. I think they've got a firm, you know, financial statement. I think they're actually a pretty good company. But, you know, I haven't pulled the trigger on investing. I think the financials are still in a tough spot. And PayPal was moving up slightly, but even that one, I don't know. Yeah. PayPal, you want to watch PayPal because it's slowly been ticking up. You're at like 8 days now of an uptick. Let me count. One sec. 1, 2, 3, 4, 5, 6, 7, 8. Ha ha. 8 days of an uptick. So watch PayPal, but it's sneaking up on people. It's not just PayPal that's sneaking up on people. It's Disney. Disney's been up now for about a month and a bit, so about 5 weeks. Let's see. Fib hack? Hell yeah. So let's see here. I don't get the SoFi pessimism. It's not SoFi pessimism. It's just valuations. So somebody who says super emotional about Tesla. I know. It like me too. Like it's such a great freaking company. Like it I don't even know how to explain my love for Tesla. But you know, you have to separate love and fact. Redfin looks oversold, even though the rule affects Zillow negatively. The thing is, this ruling does nothing for the volume of home sales. Nothing. So I don't know about that. The lines on the queues. Yeah, we're above fib right now. We're heading to 500, baby. So the queues have 500 divided by 439. The queues have about 14% upside. Oh, is Google going to try to break? I think it has a chance to break out of this. And then the next stop for Google. I'll write that down. Hopefully we get a little bit of a drop on Google tomorrow, and then maybe you go with like a longer call. You know, you get like a tactical retracement. You go in for a longer call on Google because when they break out, you're going to 194. So you're up, that's what, 33%? 194 divided by 132 or 152, 27.6%. I think you got 27.6% upside here on Google. But not today. Not today. You can't do it today. You can't do it being up 7%. I don't think so. I don't know, maybe even it'll be up 2% tomorrow, but I think then at least the volatility will be lower. But I'd rather have a little bit of a minus because volatility is going to be explosive today. That's not even out yet. Oh, yeah. What else? Okay, so what else? We are gearing up for our event, June 21 to 23. Make sure you join me. June 21 to 23, Vegas. Look forward to seeing you there. Go to meetkevin.com, get your ticket. If you want to be in the course member live streams, by the way, we extend this kind of talk for about another 40 minutes. And it's actual fundamental analysis, technical analysis, Q&A. It's pretty good. You should join it. And you get lifetime access. You buy once, you get lifetime access. So, you know, I know everybody came in here starting today shitting on me regarding Tesla, even though I'm not even short Tesla right now. But I'm like, this 4% rally you've got on Tesla is Fugazi. It's not going to last. Here you go. So we'll see. We'll see. Oh, Google's trying to push for the breakout now. There's no way. I mean, I guess there's a way, but I don't know. Let's talk about that one in more detail. Watching Enphase as well as sort of a leading indicator of what the interest rate sensitives are doing today. And I had the downtrend. Downtrend did pause a little bit, so I'm going to use this as a leading indicator. So what else? How about courses are so worth it? Thank you so much for that. Okay. Ross G is butthurt with Elon and making false accusation. Oh, I haven't seen that. Course member access is awesome. Well worth the money. Thank you so much. Let's see here. What else? Cybertruck means nothing to the stock. Says someone it actually hurts the bottom line. Well, it is true. It does hurt the bottom line for a while. It does. Okay. All right. Anything else? I think what I'm going to do is I'm going to look at some sticks. And then maybe we'll have some final comments here, but let's get this out of the way. Even though I'm a licensed financial advisor, real estate broker, and becoming a stockbroker, this video is neither personalized financial advice nor real estate advice for you. It is not tax, legal, or otherwise personalized advice tailored to you. This video provides generalized perspective, information, and commentary. Any third-party content I show should not be deemed endorsed by me. This video is not and shall never be deemed reasonably sufficient information for the purpose of evaluating a security or investment decision. Any links or promoted products are either paid affiliations or products or services which we may benefit from. I personally operate and actively manage ETF and hold long positions in various securities, potentially including those mentioned in this video. However, I have no relationship to any issuers other than HouseHack, nor am I presently acting as a market maker. Go buy the rumor, sell the news. Buy the rumor, buy the rumor, buy the rumor. That's all we're getting on NVIDIA. It's a clown show. Clown show. You know what else is a clown show? Apple actually going up on this news. Clown show. Pathetic. I'm disgusted at Apple. And I wanted to buy the dip on Apple last week. But then the name of the game has changed. All right, folks. I'm going to go make another cup of coffee. And I'm going to go see y'all in the course member live stream. I appreciate y'all. I love you being here. Make sure you get life insurance in as little as 5 minutes by going to metkevin.com/life. If you like Webull, it's on Apple, it's on Windows. Make sure to go to metkevin.com/Webull to get your free stocks. This is the Apple version. This is the Windows version. See, it's real. Join me to get all my buy-sell alerts in the Stocks and Psychology of Money group. Lifetime access to the course member live stream. Come to the event, June 21 to 23. And, of course, make sure you consider investing in HouseHack. If you're an accredited investor by going to househack.com/2024, we've got really big things happening this year, and I could not be more excited. Thanks again. Goodbye.